I think Bessent understood exactly what the structure of the market was at the end of July. Everybody made a big deal at the beginning of last week. Bessent intervened in the markets and it lasted a day. Yeah, go look at it today. I absolutely expect Warsh to do what he needs to do. There's no air between the Treasury Department and the Federal Reserve. So Warsh at Jackson Hole is going to be very interesting. We're looking at a scenario where there's going to be a lot of credit expansion for new production that's going to get paid back and not be inflationary. And then the only thing you have to do at that point is raise the value of the collateral, the gold, the Bitcoin, and everything else that then balances the balance sheet. The only thing that can stop us from doing this is our own traders within our Congress. And even then, the SEC and the Treasury said, okay, you're not going to pass the Clarity Act anytime soon. We're still moving forward with digital asset regulations. And that's why gold, silver, Bitcoin all exploded. This is a long time coming. This is a thing that's going to have to span multiple administrations. And then once you improve the long-term cash flow of the country, then you don't need income taxes anymore. I think Bessent understood exactly what the structure of the market was at the end of July. And now he's moving into the Treasury market to let them know what's going on. I'm going to give a hat tip to my friend Brent Johnson over at Santiago Capital, because Brent put out an article, I think it was yesterday or the day, it was today's Tuesday, right? So it was yesterday. And Brent's a good guy. He gave me a gratis subscription to his Substack and the base level of the service. And that article is excellent. It's called He Knows Something. And it's about Scott Bessent. And it's behind the paywall, but hey man, like it is what Brent's got to make money, right? But it was a great article because it goes through the entire structure of what he did and why when he announced last week that he was expanding the Treasury buyback thing. So now let's talk about that, because this is another piece of this puzzle. So that one, and again, I'm riffing off of Brent here. So Brent's goal was to explain why it wasn't QE, which it's not. Why it's not even money printing. It's just doing exact. And there are other people who've discussed the same thing. I know that Daniel DiMartino Booth has discussed this way, and other people have written extensively about it. Whereas everybody else wants to go way histrionic on this, but the market reacted strongly to this. So what happened? What did he actually do? So the Treasury reverse auction facility that's been in place for God knows how long, all he did was he took the long end of the curve and that facility from the 10, the 20, and the 30 year, the 10-20 spread and the 20-30 spread, and said, look, I can buy up to $4 billion now as opposed to $2 billion. Now, here's the interesting part about it that no one talked about, but Brent did, and he mentioned it. And again, I'm going to give him mad props for this, because all he did was illuminate a fact, and here's the fact. And everything in the 10-year and below market was already at $4 billion. So all Bessent did was normalize this entire program across the entire yield curve. Now, interesting that you say that, right? Because what does that imply? Well, it implies that we know that the everything longer than the 10-year is a much lower liquidity environment, right? Yep. There's not as many 30s running around. There's certainly not any 20s running around, right? So there's not a lot of liquidity out there. There's a lot of demand for it, but there's not a lot of supply. So then, what he's saying is, look, it's my job as Treasury Secretary. Think of him now as the CFO of a company, and you've got a whole bunch of debt that you got to manage. You're going to manage the balance sheet of your company to manage the term structure of your cap table. Like, this is not rocket science. This is just basic, everyday CFO stuff. It's not 4D chess. It's not grand strategy. It's just a thing you do. So by doing this, all he's saying is, I'm going to ensure that I'm going to have the same amount of liquidity available to move the volume average maturity of the US yield curve to where I want it, when I want it. And I'm going to then signal, by doing this, what he did was he signaled strongly to the fixed income market, hey, don't worry. I understand that 5.25% has you worried, because again, 5.25% is another one of these trigger points. Just like 4.75 on the U.S. 10-year, 5.25 on the U.S. 30-year. Now, what I've noticed in the past is that, I've always said to my patrons, and I've said on other podcasts, I'm like, look, central banks are not particularly sophisticated, generally speaking, not generally sophisticated buyers and sellers of and managers of their portfolio, right? And I'm leaving aside the nefarious ones. I'm leaving aside the hostile ones like the Bank of England, like the ECB. I'm just talking in general, the Bank of Thailand, okay, the Bank of Malaysia, okay? Like they're not going to be sitting there going, should I buy U.S. Treasuries at 521 versus 519? No, they're going to go, I'll buy a 5.25.
Yep.
I'll buy a 5, right? They're thinking, and I use the phrase setting up on the quarter point. Like they set up their buy schedule, to defend their currency and defend everything on the quarter point. So whenever people start, getting histrionic on Twitter and they go, oh my God, the 10-year hit 517, or 30-year hit 517. I'm like, wake me when it gets to 525. When it gets to 525, we have a decision point in front of us. That's important. If it goes through that, which it did, that requires some form of reaction. Either there's some structural, it's implying there's a structural problem, or that the Treasury or the Fed's going to have to come in and do something about this. But here's the thing. If there's not enough liquidity in the market, because statutorily, the Treasury Department has got their hands tied and say they can only buy they can only do reverse auctions and on $2 billion when there's more liquidity in the shorter end of the yield curve. Well, that's going to bias how people attack the long end of the yield curve if they have bad intentions, right? Because he can only buy back $2 billion. So if he can buy back $4 billion, now he can defend 525. Now he has more room to defend 525.
And even just quickly on that, Tom, just for clarification, because you're right, this has been a signal, right? He actually hasn't done any buying back yet. It's been purely just saying the intent and setting up the possibility that he can. Am I correct in that?
Mm-hmm. You absolutely are, because Nathan, it's an important point. None of this is going to even he's not even going to have the new limit in place, until November after the midterms. This is just a signal. So, like the intervention where neither the BOJ nor the Fed raised interest rates, or even worse, squeezed the carry trade by having the BOJ raise on the low end and the Fed stay constant, and then squeeze the carry trade, which, by the way, go look at the Japanese German Bund 10-year spread and tell me that someone wasn't about to lose their ass if the Japanese raise interest rates by 25 basis points, because that spread's only 30 basis points.
Ooh.
Right. So the Japanese are actually in the driver's seat because they can just let the long end of the yield curve rise. So once it gets above a certain level, this is why, again, why would the Bundesbank then be incentivized to be managing the euro-yen cross and the German Bund Japanese carry trade spread, the Japanese JGB spread, if we were still at 70 or 80 basis points. So now you know why the market was screaming for Kevin Warsh to raise interest rates by 25 basis points, because they were scared that the BOJ was going to raise and squeeze the carry trade. So they wanted them both to go up by a quarter point as opposed to the pincer move. And I said, going into this, I said to my newsletter subscribers and other people, I'm like, dude, if I was in charge of this, if I were Kevin Warsh and I were Scott Bessent, I'd be like, we're gonna lower a quarter point at the Fed, and we're gonna raise by a quarter point by the Japanese, and watch the entire world blow up, because we had gotten the things to that, the spreads that tight, right? And the German Bund market is the safe haven market for European bond markets, right? Why I look at the U.S. German spread is because if the U.S. 10-year is the safe haven trade of the world, safe haven asset of the world, the German Bund is the safe haven asset of Europe, right?
And for context too, what are you seeing? Because I haven't even pulled up, I haven't looked at the German bunds recently. What are we seeing in their market right now?
Well, I mean, again, and this is the other problem. Okay, what we're seeing is that the German 10-year is trading between 320 and 325 basis points, which is the highest it's been in forever, since before the global financial crisis. It's been forever. But that's being pulled higher because the Americans pulled, the farther you pull the long end of our yield curve up, they've got to rise with it, right? They've got to rise with it in order to keep the spreads somewhat. Now, understand that over the course of the hiking cycle since Powell started hiking rates back in 2022, that spread collapsed from 2.1 or 2.2% between the U.S. and German down to like at times 1.3, 1.4. It's trading between 1.4 and 1.5 right now. And Lagarde is desperate, I think, to hold that area because if it goes lower than that, again, other trades start to fall apart. It starts to put pressure on their banking system, starts to put pressure on pension funds. What I'm getting at here for the TLDR, for the people who don't understand 90% of this shit, it comes down to this. We're squeezing their nuts in a vice over bond spreads because they know full well that if that happens, you're going to blow up German pension funds. You're going to blow up this. You're going to blow up that. They're trying to promote the idea and manage everyone's perspective that Germany, for example, is still a safer market than the United States. Now, that's laughable on the face of it, given that the Germans are now paying almost $11 a gallon for diesel fuel. Again, which ties right back into Iran, right? Because, hey, and the thing I don't even understand at this point is, well, I do understand it. It's just they're vandals. They know that they're trapped if this system that I just described can't continue, right? And slowly but surely they're just being bled out with all of these spreads tightening against them. So what do they need? They need a war to blow out all the spreads, to make capital move. They need an excuse to default in Europe, and then consolidate all the debt under the rubric of the ECB and the digital euro, stiff all the bondholders and move on. And hope that they blow up the American markets in the process. And then if they go for the default and cleaning of their balance sheet, they'll be the first ones to come out the other side with a quote unquote clean balance sheet. And then the money will flow back into, their markets and they'll leave us a smoking ruin. That's their game plan, right? It's financial warfare. And the Mark Carney thing is yet another piece of that puzzle trying to, and I don't have a full handle on this yet, but it's clear that Carney is trying to provoke more uncertainty in the long end of our yield curve.
Yep.
By starting a trade war with the United States. And again, I'm not even I'm not going to sugarcoat anything here, folks. This is all shit that I've been wrestling with literally all morning since I got up at like 5 o'clock and been thinking about it all morning. I'm still wrestling with all these ideas about what this all actually means. In a couple of days, it'll probably finally gel, finally get like the Rosetta Stone.
The things that immediately kind of jump in and stand out to me is one, I'm thinking about the oil collateral being needed from Iran. And then I'm wondering if it's basically they want Canadian energy to be used as collateral for Europe. And then I'm thinking just about like, if I just take the simplistic view that the yields that we're seeing is a combination of inflation expectations, growth expectations, and risk. If they're just trying to destabilize things to the north of the U.S. just to increase the risk bucket and try and increase the yield curve. The other one I want to tag in there quickly as well, too, is that would you then anticipate that Warsh is going to play ball with Bessent and actually lower rates to narrow that spread?
I absolutely expect Warsh to do what he needs to do. There's no air between the Treasury Department and the Federal Reserve. Someone is trying to create this idea that there is, and I'm telling you, there absolutely is not. Warsh at Jackson Hole is going to be very interesting.
Yeah, that's coming up here quick.
Right. So Jackson Hole's is coming up, and then the September, or then the next rate, the decision is coming up, and here we go, and then we're potentially off to the races. So, listen to Warsh very carefully. I can tell you, I think there is continuity between them in that Warsh ended forward guidance.
Yep.
Hey, man, we're not telling you what we're going to do next. Ueda at the BOJ has become a guy who's not really telling the markets what he's going to do. He's doing it less and less and less. And then Bessent went out there and sold euros and didn't tell anybody. The same way Powell didn't let Europe know that he was bailing out or brokering the deal to move Credit Suisse into UBS. So Bessent's the guy out there telegraphing his big move, saying, "Oh no, we're going to take you out."
Yep.
And Bessent just came out yesterday and said every country that is still doing business with Iran at all will have its banks cut out of the dollar system. Now, I got news for you, folks. The Canadian banks are absolutely involved in this at every freaking level. It's obvious that there are fingerprints everywhere. Yeah, some of this is inferential. Some of it is just like, okay, so where do you think the money's flowing from and through? What banks? Where's this going? If you want to launder this money so that you can pay guys on the ground around the world, like at the end of the day, one of the things I was thinking about as I was trying to write about this for the last couple of days is, and this is a point that my friend Alex Craner used to make all the time. When we used to talk about this 2-3 years ago, it's like, look, at the end of the day, you can run drugs and people and money and guns and this and that and everything else, but at some point, it can't move at the speed of cash. It's got to move at the speed of the banking system. Meaning you have to be able to move $5 billion around the world from one side to the other. You have to make payroll to pay this guy over here. Money has to move faster than the speed of cash. And it can't be just a cash-based business because cash is easy to intercept once you know where it's. So it's got to get laundered through the banking system. So everybody's banks at some level are a part of it. And if you're going to, let's just call a spade a spade. There's a lot of the real offshore banking network, the real shadow banking system happens everywhere. In the Caribbean, off the coast of Venezuela, like it's everywhere. And that's what Bessent is doing, is saying, look, the first thing he did during all of this was to start sanctioning the Gulf states who were laundering money for the IRGC or managing money for the IRGC, especially in Dubai. That got shut down. Now he's going to shut everybody else down. And then God knows how much money is actually available and is on the table here. I don't know, but I can tell you that it's got to be a lot because of the way everybody is acting, right? And it's like the biggest, it's like the worst, it's like the worst kept secret in the world that, in all the column inches and all of the thousands of words and the hundreds and thousands of hours of podcasts that people have gone through, that have done since the beginning of the Iran war, did anybody ever ask the one basic question? How in the actual fuck was Iran getting any dollars? Because they need dollars to pay. You think the IRGC guys with their kids in, French private schools, like, you think they're not interacting with the dollar system? Or, whatever. These guys have their kids everywhere. Like they have their families don't live in Iran. They live, come on, they all live the high life outside of Iran, and they need dollars. And it's no different than any other organized crime family. I don't care if we're talking Iranian or Italian or Russian or Chinese, or there are mobsters everywhere. There are Mexican cartel guys. There are cartel guys everywhere, and they all need dollars because that's what makes the world go round. And so, how are they all getting them? It's a good question. And no one wanted to ask that question. They all wanted to get on their morality high horse and scream that this was unfair. Fuck fair. Like, all of this is being liquefied by the U.S. taxpayer because every goddamn bit of this is being, the money flow for all of this stuff stems directly from the U.S. taxpayer. Because without the U.S. taxpayer putting the money into the free and paying the coupons on the treasury bonds, none of this money moves around. And that's when we start looking at the amount of fraud that's been flowing through the NGOs, right? The social welfare departments and all this Medicare fraud and Social Security fraud and this.
I was gonna say, wasn't there something
quality
from
clearing
RFK
centers
recently?
and what's that? Yeah,
Wasn't there something from RFK recently on Medicaid fraud?
Yeah, yesterday. He's like, there's a couple of million people on doing Medicaid fraud. We have over 1 million people that are receiving Obamacare that don't qualify for it. We have dead people getting Social Security benefits. Like, it's just the amount of fraud is staggering. Payments. So are payments expanding at a greater rate than outlays. How fast are payments to the United States, including tariffs and everything else? How much are they expanding year over year? About 4%. Okay, that's interesting. How much are outlays increasing? About 3%. Oh, well, isn't that interesting? So the rate of growth of payments to the American government versus the amount of money that the government is spending is growing by 33%. It's relatively speaking, one is growing 33% faster than the other. Correct? $4 in and four more dollars in, but only $3 more going out. Huh.
Yep.
So guess what? That means that the budget deficit is going to go down. So then I said, do some budget projections for me. Imagine I think we can probably assume a 5% reduction in fraud year over year. I think that's fair. Like there's $2 trillion, let's say there's $2 trillion worth of fraud. We can get 5% of that gone. What is that? $100 billion. You think we can't like trim $100 billion out of this government? Oh, I think we already have. So let's cut $100 billion out, keeping those same growth rates in place. And that's not even a fair, right, assessment. Just do that. Do you know how quickly it takes by 2028, by the end of Trump's term, we would be down to less than $1 trillion a year in deficit from with the 1.8 that the Biden administration left us. That's exactly the thing I was talking about 3 years ago, saying, look, all we have to do is get that, as long as that's the rail. And if we've changed the system about how we spend the money, that mechanistically the money doesn't just get shoveled out the door. That, every 3 years, for example, you have to reapply for your Social Security disability, not have it be open-ended once you qualify for the rest of your life. Every 3 years, you got to do proof of life. Okay. Well, there you go.
Seems reasonable.
Seems reasonable, right? Like you want the money for the rest, you want the money, that's fine. You can get it, but you have to just show proof of life. This kind of thing is endemic across everything that the Trump administration is doing below the headlines. This is going to structurally change the way the money flows out the door. Therefore, it's pretty easy to think that that's the path we're on, regardless of whether we win the midterms, regardless of whether or not, regardless of who even wins in 2028, regardless of whether or not the Strait of Hormuz is open or the United States government is immoral or this or deserves to be blown off the face of the planet, or I don't care. At this point, I just don't give a shit, folks. Like, we've all been gaslit by a bunch of evil friggin' people who've been pulling cash flow on top of cash flow on top of cash flow, our tax dollars, and I'm tired of paying it. And I'm here to tell you, I'm done, and I'm done hating myself for being the world's bitch. That's it.
One company I like pointing people to when they ask about Bitcoin mining is Abundant Mines. They were founded by Bo and Christine Turner after losing over $500,000 to broken promises in the mining industry. And they built their hosting model to remove the usual headaches. With Abundant Mines, you own your machines and keep 100% of the Bitcoin you mine. There's no revenue share, no hidden skims. Pricing is simple. One flat monthly fee covers power, parts, labor, and repairs. They also guarantee uptime. If a machine goes down, their hash rate redirect system routes hash power from their fleet so earnings don't just stop, and every machine is insured at full replacement value. Everything is hosted in the US, powered by Hydro, and mining equipment may qualify for 100% year one bonus depreciation. Learn more at abundantmines.com/sessions. Hey, you. Yes, you watching the Bitcoin price movements and the latest exciting news. It's awesome to stay informed, but the real power of Bitcoin comes from taking control. Don't just watch, take action. Head over to btcsessions.ca/learn for free step-by-step tutorials that guide you through every major skill you need to know, plus full video playlists for deeper dives on any topic you like. And if you're ready for the ultimate fast track, scroll to the bottom and check out bitcoinmentor.io for premium one-on-one experience with my team of Bitcoin experts to ensure you get it right the first time. Don't wait. Secure your Bitcoin future today. Hit the link in the show notes or scan the QR code on the screen.
Specifically jumping back to the money flows, the one thing that I noticed I don't think was included, I think there was like 60 institutions or designations within Bessent's what is it? Economic isolation. I forget what he called it. Economic outcast, Operation Economic Outcast. But what seemed to not be in the ones that he directly mentioned was China, which I figured would have been the absolutely one of the ones working directly with Iran. That would be the ones that he's going after. And what my brain is trying to tease apart, but I don't quite understand or know what's happening here, is the relationship between China, Iran, Canada, and the U.S. I think if I remember correctly, I think it's TD Bank has more locations in the U.S. than they even have in Canada. So it seems like we're just a way to get access to not only the U.S. banking system, but also get access to the U.S. markets. And I'm pretty sure that we got Chinese goods that are coming into Canada and then just flowing down south below. So yes. I'm wondering if you've landed on anything with regards to China's relationship to all this mess kind of going on. I know it's a lot, but that's the threads that were coming together.
It's actually not that complicated. Let's go back to earlier in the year. Before Trump went to Beijing.
That's right, yes.
Mark Carney went to Beijing. Mark Carney comes back with a deal that apparently, on whatever the goods were that he cut it, the small deal, and everybody made fun of it, and rightly so, because he got treated like the help. But Carney got something that he wanted, which was he got a deal with China that contravened the USMCA. Okay. And now he used that as an excuse to blow up the trade talks. So clearly that was his goal. Trump goes to Beijing and gets a hero's welcome and, a big state thing and yada, yada, yada. Xi is coming to the United States next month. Carney's clearly been trying to use China to get them to invest in Canada, using the European Union, trying to bring Canada in to be the thing that controls, I guess, the Arctic or whatever. I don't know whatever these people are thinking, but they're dumb. He's got to try. So the Canadian part of this is clearly the squeeze play. They're trying to create the failed state and porous border for the flow of goods and services and money and everything else from Canada, and basically because Trump's cleaning up Mexico, and the Chinese aren't really playing along. That's what I've seen. We'll know more about this after Xi visits Trump. Now, let's set our focus into the next month. Actually, before we do that, let's talk about why John Radcliffe is in Moscow right now.
Please.
Yeah, think about that for a second. I saw that this morning. What is John Radcliffe, the CIA director, doing in Moscow right now when the Ukrainians are constantly shelling Russian oil refineries and making the price of diesel fuel go ugly? I think that everybody is clearly on edge about some kind of ugly false flag between now and the election. Someone wants a war desperately. Again, I've already made the argument as to why Europe wants the war. So you send Radcliffe over to Moscow, and this is being done in the open. I was talking to Blaine Holt about this morning, and I asked Blaine about this, and he said, well, normally flights like this are pretty secret. No one knows about them. This one is being mentioned out in the open, which is another way of saying the Russians and the Americans are coordinating. And they both know that whatever you think you have planned, MI6, French intelligence, Mossad, or whomever, or all of the above, including the CIA, not the rogue elements in the CIA. Rogue elements in the CIA are the Patriots. Right. I consider the CIA a treasonous organization with some rogue patriots inside of it. They're clearly telegraphing to the world that we know what you potentially have on tap. We're doing intelligence sharing. Don't worry about it. So there's the Russia angle on it. The Chinese angle, I think, is pretty obvious, because the Chinese have said boo about this. Bessent, as you noted, didn't mention any Chinese banks. Again, the Chinese banks shouldn't even be, in many ways, the Chinese banks shouldn't even be a part of this conversation anyway, right? Because a lot of that cross-border trade would be done through Hong Kong, right? All right. And, whose banks are still really prominent in Hong Kong? Oh, that would be London's. Yeah. So, and then I was doing a little bit of preliminary work on trying to tease out what was going on inside the Hong Kong dollar and the Hong Kong markets. And because, I mean, look, it's a currency peg. In this market, it's a currency peg. It could break down. And, after I looked at the TIC report last month, I noted that the Hong Kong Monetary Authority, they spent a lot of money defending the peg in June, the height of the oil crisis. Now, again, the TIC data is all 2 months in arrears, so it's like you're looking in the rearview mirror to try and figure out where you're going, which is not a particularly great, indicator of anything, but it does begin to give you the ability to do some forensic work to explain at least what we've seen and why maybe the headlines were wrong, yada, yada, yada. And at least, again, it's like everything else. It's an historical document that can only help you, maybe give you some insight into the future. So I'd say that I still believe that the whole America, Russia, China versus the EU is still real. If I'm Russia, if I'm China, I still need Trump to prove that he's winning and in charge of everything. So if I'm them, I'm hedging my bets.
Yep.
Right, in the markets. I have to hedge my bets. So their behavior overall is not going to be clean. And so you will be easy for people to see them making, and, again, if your perspective is America and Chinese and, it's BRICS versus the Americans, or it's BRICS versus the West, which I think is a terrible framework. It's not that it's not real. It's just not dominant. The Chinese don't need BRICS. The Russians don't need BRICS. They don't. They needed it if the United States and Europe were in cahoots running their, British globalist playbook that we all grew up with. Then yes, BRICS is important. So continuing to use BRICS in some ways and any of those institutions and any of those, that infrastructure that they built, sure, makes sense. It's a hedge, and it's there as a backstop in case the United States collapses or, Trump loses and the United States is subsumed back into the quote unquote City of London, Davos, miasma of suck. And we lose our independence bid, basically. But if we win our independence bid, BRICS is going to become an appendage. It's going to be an anachronism. It'll still exist as kind of there'll still be Exim Bank aspects of it. There'll still be some, it'll be useful to help develop Central Asia and Southeast Asia, just as means by which to get capital in there efficiently, but it won't be this great, challenge to the U.S. dollar hegemony that everybody wants to talk about. That's all bullshit. The dollar settles more trade now than it ever has, as a percentage. Like, get over it, folks. You're losing. So, and if the United States gets their way, then this is something no one can really stop, which is we get into crypto and we get into stable coins and all of that. Sorry, folks, like, you can't tell us we can't do this. The only thing that can stop us from doing this is our own traders within our Congress. And even then, the SEC and the Treasury said, okay, you're not going to pass the Clarity Act anytime soon. We're still moving forward with digital asset regulations. And we're going to bank all this stuff. And that's why gold, silver, Bitcoin all exploded. That's part of the reason why, we saw liquidity come back into the markets overall, because basically you started seeing, look, everybody made a big deal beginning of last week. Bessent intervened in the markets and it lasted a day. And then the 30-year was back up to 525 immediately. You got 9 basis points and then he lost it in a day. Yeah, go look at it today. Yep. The 30-year's trading at 517.
Yep.
The 10-year's trading at 4.
It's right back to that position it was when it dropped on the news.
Exactly. And if you go ahead and look at like a weekly chart of the yield, you'll see an outside reversal to the downside. Like, I mean, I'm like looking at, it's Tuesday. A lot of trading to do this week. Anything has happened, folks. Complicated business, all of that stuff. Just, again, watch the markets. The 10-year's trading at 464, 465. The Treasury, the 30-year's trading at, 517. And Bessent's signal to the market was, hey, look, we're not going to let it go. There's not going to be much more downside. So maybe it gets to 5.5 in a fluke, something like that, maybe. But we're not going to a 6 handle. And if we're not going to a 6 handle, that means that the United States can then start getting control over the long end of its yield curve. And these are bits and pieces that's putting in place in order to do so. The free marketeers will all scream bloody murder. Fannie and Freddie will come back onto the market, start making a market mortgage-backed securities, and start bringing the long end of the yield curve down, and then allow Warsh to start cutting the short end if he needs to. Or, my friend Vince Launchy likes to talk about the thing to do now is to flatten the yield curve. So he thinks that Warsh is going to raise on the short end, and I'm like, no, we're going to bring the long end down.
Yeah.
And we're going to bring the long end down faster than we bring the short end down. But Trump's not wrong. If once the economy begins to take off, we're looking at a scenario where there's going to be a lot of credit expansion for new production that's going to get paid back and not be inflationary, and and then all of these people are in trouble. And then the only thing you have to do at that point is raise the value of the collateral, the gold, the Bitcoin, and everything else that then balances the balance sheet. Now, that's a process. That is not a by the end of the year process. That's a by the end of, by the middle of the next decade process. This is a long time coming. This is a thing that's going to have to span multiple administrations, but you got to get that work done now to set those trends in motion such that, the political realities for the next generation of politicians can't stop it because the people aren't going to allow it to stop. And that's where we are. But we're going to have to go through a very tumultuous period. And it could be even a very painful period. And we're going to see a lot of people taken out on stretchers in the process. It's not going to be easy, but it's possible. And it gets more probable every day that we know that we have people in charge who see the world that way and see the path forward. They're implementing the path forward that I was talking about 3 years ago.
Yep.
And it's not that I didn't advise them on this. I just saw it and went, this is what I think they should do. And then amazingly, it's kind of out there happening. And because it's not that difficult once you stop focusing on debt and start focusing on the balance sheet, right? And that's what you have to, and this is, I think, a very important thing. When all the messaging, the Bitcoin people do this, the gold guys do it, we all do it. I was trained in it as well, and I had to break out of it eventually. You can't just look at one side of the balance sheet, just like Martin Armstrong's been saying for years. You can't just look at the money supply. You also have to look at the demand for money. You can look at the supply of money, but you also have to look at the demand for money. And that's the problem with the quantity theory of money, for example. And this is one of the things that a lot of people in this space don't quite grasp. They grasp some of the ideas, and that's good. But again, details matter, facts matter. You got to look at both sides. So assets, liabilities. We can do both. We can focus on the liabilities and figure out how we can raise the value of the assets in order to offset the liabilities, and then you don't give a shit. Then all that matters is, you've got a nice big balance sheet that's capable of servicing the debt, and then you can figure out how you're going to retire the debt and improve the cash flow. And that's the long-term goal. And then once you've improved the long-term cash flow of the country, then you don't need income taxes anymore.
Oh, wouldn't that be delightful? Wouldn't that be absolutely great?
I think that's where we're headed, Nathan.